Hi, everyone. This is Jason Bierak of Wall Street from E Street. Welcome back to another Wall Street from E Street podcast interview. Today's special guest is a first-time guest. He actually found my work through a mutual friend, Dave Kranzler, who hedge fund manager, gold hedge fund manager, Dave Kranzler, who also worked on Wall Street. Today's special guest also worked on Wall Street for 11 years as an equity options trader and different jobs in the financial industry. He has an MBA from Wharton, and he runs the website Arcadia Economics. Chris Marcus, thank you for joining me.
Well, thanks for having me, Jason. It's been nice getting to know you, and I appreciate being on the show, and certainly a lot to talk about today, huh?
Yes, and before we talk about, some of the current events, and I know you're trading these markets because I've had conversations with you about that. Before we talk about that, let's just talk about your background first so our listeners get to know you a little bit and, where you came from in the financial industry, how you found the Austrian School of Economics, things like that.
Sure. Well, my first job out of college was working for Moody's back in 2001, which obviously years later has taken on a different perspective. Was rating asset-backed commercial paper programs, a lot of these off-balance financing deals, off-balance sheet financing deals that didn't work out so well later on. Left after a couple of years to go to Wharton, then was trading equity options with Susquehanna. And really, when the subprime bubble started imploding in 2007 and through 2008 and 2009, at that point, I was still going with the traditional mainstream views. It's fascinating looking back. Actually, started writing a book a couple of years ago and had a chapter about Wharton where it's interesting how, like many of these schools and graduate programs in different industries, it's not necessarily based on what I would say is the right answer, but following a certain mentality of thinking. Remember back at Wharton, if you wanted any sort of job in trading, the class everyone told you to take was Jeremy Siegel, who's the stocks for the long run, and it sounds like he would fit in quite well at a dinner party with Bernanke and Yellen and all the other folks that see any issue and just say print money. So after the bubble really happened, I found it odd how with my background, I was sitting there wondering, all right, well, when are things better? When do we go back to normal? And thinking about, wait a second, I've been working on Wall Street, went to business school, and yet never heard anyone mention anything about the problems. And there was something that just always didn't add up. And in 2009, actually one of the guys who trained me was a really smart trader, so a guy I knew and respected, and he was always walking around the New York Stock Exchange telling everyone how we're going to be paying $11 for a loaf of bread soon. And fortunately, one thing that I think has served me well is not just dismissing, there's certainly a lot of ideas that are wild. Some of them turn out to be right, some not. But that led me to be introduced to Peter Schiff, where it was the first time in my Wall Street career really hearing much about gold or silver. And certainly for people who have listened to Peter, he has no shortage of evidence of problems in the system. I found his book in 2006 really detailing what was going to happen pretty much to the letter. It was just a real eye-opener that was my turning point and led me to start listening and reading a lot of the other gold and silver folks, getting into Austrian economics, which to me is just such a beautiful science that it's like the opposite of what we've grown up with all this bizarre, all right, banks melt it down, print up a fresh batch of hundreds, which is as illogical as it seems. So reading von Mises and just I went through my Ayn Rand phase, and it was really the turning point, which once you start to see a lot of the things that we weren't told, certainly there's that period of frustration that I went through. I think a lot of people go through, seeing how much different banking politics are from what we've been told. Yet what I still to this day feel is an incredible blessing is that, all right, once you find out about this stuff, get a grasp on what's going on, you can use it to your advantage. You can step out of the way of the train and use what's happening in an honest interpretation of what's going on in the market, so that certainly like you, Jason, if there's a way that we have bubbles that aren't due to implode at some point, I have yet to figure that out. But it's been exciting being able to see that in advance. Similar to a lot of people who might be familiar with the movie The Big Short, which I thought was stunning, especially the scene with the rating agencies in particular. But just rather than feeling like you have to be a victim and whatever happens in the economy has power over you, when you begin to understand this and listening to shows like yours and a lot of the other great researchers that are out there doing honest and really valuable work, to me, it gives people a lot of power back. And rather than having to fear what's going to happen in Washington or in some of the Wall Street banks, you can sleep at night knowing that, all right, I understand what's going on. I can see what these guys are doing and plan intelligently based on that.
Now, you traded on the American Stock Exchange. You were an equity options trader for 11 years, right? How many?
7 years trading options for 6 years, from 2005 to 2012.
Okay. And so 11 years in the financial industry total. I'll attach the link to your bio if our listeners want to read more about it after the interview. But were your contemporaries, a couple years before the 2008 financial crisis and everything fell apart, were they beginning to question, that these home prices are going up, these banks like Lehman Brothers, Bear Stearns, were crazy amounts of leverage, and these mortgage-backed securities were garbage? Did they see things in advance, or they just didn't care? They were only, trading earnings, trading equity options. What was the mindset for the majority of traders you were working with back then?
Not only in fact, I can't remember a single person mentioning anything about any of the problems before the bubble collapsed. Yet, even more so after the bubble collapsed, and I started getting into Austrian economics, and you mentioned we were first on the American Stock Exchange, which then closed down. We moved over to the New York Stock Exchange, and I eventually became the gold and silver guy that everyone looked at like what the heck is this guy talking about? And, started studying and researching this. Yet, even after the bubble collapsed, it was still as if they just didn't get it. And there were some guys that sometimes, now I'm 39 now, so I was a little younger then, but I guess the best way I always describe it was, because I don't know, I like to always look for evidence and connect facts and not just hear something and repeat it or believe it, but think about why. So I usually had good information when I would talk about these things. And I remember the reaction was somewhere along the lines of, either this guy's crazy, or there were a few who were like, maybe the kid's right, but... And I actually had one person say this where, hey, things are good right now. The wife's happy, you have the 2 cars, just don't want to know more and hope it all works out. So,
So it was mentally uncomfortable then for them to want to, think about these deeper answers that, why is the Federal Reserve and these other central banks, why is Congress, doing TARP and bailing out the banks, bailing out AIG? So they didn't want to think about that stuff. They wanted to basically just, when do we get back to normal so I could just do my normal job, trade, and make a lot of money then?
Yeah, it was similar to even outside of the Wall Street industry where, you have to challenge a lot of your beliefs. So I understand it, and I get it on one hand when some people are saying, when are the sheeple going to wake up or get this and that? And I get that. At the same time, I realize we all get it at our own time, because I would imagine similar to someone who enters the military with an honest intention saying, I love my country, I love my family, I want to be patriotic and support it. And then one day they find out some of the real reasons behind the wars, or to give a specific example, I wonder what it was like for someone in the military who went over to Iraq because there were weapons of mass destruction, and then we find out later not only weren't there weapons of mass destruction, but they knew there weren't weapons of mass destruction and sent them over there anyway. So it's like if you're going through your whole career and you just did your best to study and learn and continue to excel or move up the ladder, and then one day you find out basically everything you've been told is a complete mirage. I get it that can be a lot to handle. I think that certainly the way the system is set up and some of the things that the banks are doing are designed specifically to take advantage of that, which in the end, I feel leaves people in the position where most of these things, you spend 10 minutes on Google or YouTube, the answers come pretty quickly once you start seeing a lot of the evidence that the mainstream media doesn't put out there. But it takes a little courage to go back on some of the beliefs that we based our entire worldview around, and I think that's challenging for people. I think it's challenging for investors, but again, it's also exciting to see. I always noticed how, well, people on Wall Street just, at least when I talk to them, seem like they just weren't ready for it. I'm encouraged by how people outside of Wall Street who weren't as indoctrinated as I had been are usually a bit more open to it. I think there's an awareness that's growing. And in particular, for example, with the cryptos right now, by all means, I've been feeling, especially over the last 2 weeks, there's no question that there's now a lot of speculation and hot money going in there as well. Yet at the same time, if that leads people to get involved in the cryptos and learn about what they actually are, and I guess the simplest way that I would describe it now is that you have the debt-based fiat system that is failing, whether it completely fails today or 5 years from now. I spend most of my time trying to figure that out. Don't know the answer yet, but to me, the cryptos are setting up a system that we can shift over to. So instead of the Fed printing away 99% of the value of the dollar, I mean, imagine if all that money that's gone to Goldman or JP Morgan to buy Bentleys and yachts and mansions gets returned to the people. So I think there are a lot of things building, a lot of awareness building. And personally, I would say in terms of whether it's tomorrow or 5 years from now, I feel it's sooner rather than later. I preface that with mentioning that I've been talking about gold and silver since 2009. And while we had a big move in 2011, obviously we haven't seen gold and silver react yet, which you and I have talked about before, both agree that that's largely due to a lot of paper selling in those markets. But still, when you find out the Clintons are selling uranium to the Russians, Dr. Mark Skidmore from Michigan State, PhD economist, along with Catherine Austin Fitts, have a report out now documenting that the Department of Defense and the Department of Housing and Development and Urban Development have 21 trillion, not million, not billion, but trillion of undocumented losses. The money that, again, I'm not an accountant, but for regular people, that's basically saying, yeah, the undocumented adjustment is supposed to be, if you're a business and, you're off by a few dollars here and there and it's a small adjustment. But here, I mean, it's just stunning how the things that are coming out now, and I think people are reacting to that.
And $21 trillion, for perspective, is more than the U.S.'s current official national debt. Although, with the unfunded liabilities, obviously, $21 trillion is nowhere near as much as the total unfunded liabilities, depending upon which estimate you look at. Now, before we talk...
What's your best guess on a number on that? I felt pretty comfortable that we've been over $100 trillion for a while, and even in maybe back in 2011 or 2012, the CBO, Congressional Budget Office, here's the government even estimating it at 85 trillion, so God only knows what it is now, but if you had to guess, what would you ballpark that at?
I've seen pretty wide ranges. So I've seen people estimate lowest range as 60-something trillion, which I think is too low. I think the more accurate number is over $100 trillion when you factor in government employee pension plans that are unfunded, and Medicare, Medicaid, which are unfunded, and Social Security, which is unfunded. And then there's also the government at the state level. There's also pension funds and California state employees, teachers and government state employees there. And there's trillions of dollars there too that I'm not sure are also being accounted for. The best estimate, I think that's the most accurate, and he said he's had this looked over by government economists, is Democratic economics professor Lawrence Kotlikoff. Are you familiar with his work?
No, I'm not.
Yeah, so I'll send you articles if you want to take a look. Occasionally Greg Hunter has him on. I don't agree with everything he says because his politics are Democrat, but in this case, with the unfunded liabilities, he lays out, his itemized work showing his calculations, and he says it's like over 220 trillion. So that I think that's probably the most accurate one with Lawrence Kotlikoff. But that's not really my area of expertise. I just know it's a lot more promises have been given out. The politicians have lied and cheated and stolen and made promises they know that can't be kept in order to get elected and stay in office. And the central bankers there have not taken away the punch bowl. They've allowed the politicians and the large corporations and the Wall Street banks to get away with it. So if we didn't have, as one Austrian to another, if we didn't have central bankers in the first place, the politicians and the bankers couldn't get away with these, basically taking ridiculous risks like during the 2008 financial crisis. You wouldn't have Lehman Brothers and Bear Stearns getting away with those type of 40-to-1 leverage ratios or higher because they knew they weren't going to get bailed out. They were betting they were going to get bailed out. You wouldn't have politicians, making ridiculous promises that they knew couldn't be afforded in order to buy votes. So, if you take away the punch bowl with the central banks, a lot of these misallocations of capital wouldn't happen. But before we talk about cryptos, Chris, let's talk about gold and silver more. Since you were the crazy gold and silver guy, on the trading floor, did you ever try to tell the traders that gold and silver are manipulated, and did any of them actually agree with you?
I guess I started realizing, in fact, it was interesting. In 2011 was when I really started digging into the manipulation, because the trigger point to me, I remember I was actually going out to meet with Rick Rule in San Diego and a few guys there, and it was, I think it was like September 10th or September 11th when gold was over $1,900 an ounce, and there was I received a Wall Street Journal alert. If you remember back then, again, this was shortly after the whole debt ceiling debacle. U.S. had just gotten downgraded by S&P, and back then we actually had even gold and silver added to the CNBC ticker, similar to how the cryptos are in the mainstream now. And the Wall Street Journal alert I got was that the Swiss were basically pegging the franc to the euro, which the theme going as that came out was, wow, here's the last true safe haven, and now they're going to print that too. And I remember being excited. Well, I want to be careful because it's not like I'm excited to see things collapse or although in some ways I think to the degree that we get to a better system is good, yet from the perspective of being invested in gold and silver at the time, I was thinking, well, geez, if the last safe haven, which, well, really gold and silver being the safe haven, but if here they're going to start printing the franc, I thought, wow, this is going to be great news for gold and silver. Yet in the middle of the night, I don't know, the gold I think dropped $60 or something, and you saw these plummets, which just, I remember thinking, well, what am I missing here? This doesn't seem to make any sense. Additionally, because as a trader, if you have a massive order to sell, or let me put it in even better terms. If I had sold a massive order in the middle of the night when there's no liquidity and just blown the price down like that, I would imagine I would have been thrown out of my trading shop the next day, because it's just not how you would do it. It just seemed odd. And around that time, I remember thinking about, I never looked into it before, but I'd always heard rumors of gold and silver manipulation. I also started thinking about how here it was, by that point, 10 years in Wall Street. I couldn't think of a single person I had met that traded gold and silver, knew much about it. It's really a bit of an opaque market where doesn't kind of goes under the radar unless things are really moving. So certainly then started reading Ted Butler, Eric Sprott, John Embry, a lot of these guys that also Ed Steer. And I think it's important where you don't want to start believing every conspiracy theory that's out there, because, again, I was trained as a trader where you want to find things that are accurate, and if they're accurate, you go with that. Also, it can be very costly if you buy into something that turns out to not be accurate. Yet, it was, again, similar to the response when I was talking to people about gold and silver. First, I thought I had to be missing something. There's no way the situation could really be this extreme. But when I remember even talking to my boss at one point, and he gave me the same answer that everybody else did, which was, well, things like that don't happen in the U.S. And okay, all right, that seems seems not the most scientific answer. Similar with the gold and silver manipulation. If there's someone out there that can explain the pricing and all of the short paper that's being written and a whole host of other questions I would love to get an answer to that could explain how this is a freely trading market. Keep in mind, it's interesting to note that basically since 2009, we've had stock markets triple, bond markets rally. Essentially, every market has accelerated except for the ones that typically you would expect, because, again, if the ounce of gold or silver hasn't changed, it's still sitting there. And sure, supply and demand, fluctuates to some degree, yet if it's just ounce of silver or dollars per ounce, it's a fraction. And when people look at the money supply chart, I think that's something I put in a lot of, I write a monthly market snapshot every month now, and I leave that in the front because I think people get it. Yeah, the banks print money. They do a lot of nefarious stuff. Yet the extent to the amount of money they've printed, I think most people still don't grasp. And just quickly to put it in perspective, you have the Fed invented in 1913. So between then and 2008, the M2 goes from 0 to 800 billion. Between 2008 and now, from 800 billion to 4 trillion. So there's just all these things accelerating that leads me to think, if you imagine what are the signs that you would look for before you hit a break point, seems like a lot of them are happening now, and I wonder how much longer the whole charade is going to be kept up.
Yeah, we basically have the everything bubble now where almost everything has been going up except for basically gold and silver and precious metal mining shares. So, that's a red flag that all this massive liquidity with cheap money and credit that global central banks have created, for perspective's sake, you brought up the Fed's money supply. I mean, the Bank of Japan, the European Central Bank, the last couple of years have actually been creating even more quantitative easing, creating more money and credit out of thin air.
And they're buying U.S. stocks now.
Yes, and this, you brought up the euro peg there with the Swiss National Bank, which is Switzerland's central bank. They're actually a technology hedge fund, over $80 billion. I think they're a couple $100 billion technology hedge fund. They're one of the largest shareholders of Facebook. They own Snapchat. They're trading technology stocks. And when you add that up with what the People's Bank of China has been doing since 2008, Chris, I mean, there's been tens of my research. I had someone in 2014 bring me information from a high-level IMF meeting. There's been tens of trillions of dollars in money and credit creation as a backstop to try to delay the next global financial crisis. And the interesting thing is, you would think that some of that money would have went into gold and silver. The paper prices on gold and silver it's almost as if it never even happened at all with the central bank money printing. So gold and silver have done nothing. They've been intentionally capped, in my opinion. The selling that you mentioned as a trader, I don't think people, it's very common every day for this selling to occur, like you said, at like 2 or 3 a.m. at weird times, very large trading volume in a liquid market to be dumped. And so this is routine now. And like you said, as a regular trader, if you were managing money or your own money, you would never do something like that, right?
Right. Yeah, it's incredible, and that's why I love that movie, The Big Short, so much, and using that as a reference where for gold and silver investors, I think the banks have thrown you an incredible challenge, because I remember in 2010 when they were getting ready to launch QE2, and I bought some gold and silver and thinking, all right, well, if you're really going to be printing this much money, then you would think gold and silver would respond. And I think a lot of people did that, and rightly so, yet are left feeling confused because they did what I would argue was a very intelligent trade. Yet certainly if you bought anywhere during the rally of 2011, you might still be sitting underwater, and it's confusing to people. And I think that's part of the intention, but I still go back and compare it to similar to how for the folks who were smart enough to realize that there was a bubble in the mortgage market, if you realize that in 2004, you sat there and watched it get bigger before it collapsed. So these things do require a bit of patience, which is why, to me, I continue to just look at the underlying fundamentals. I mean, gold and silver basically trading at what it costs to get them out of the ground. So from my perspective, when, at least if people are investing and saying, I have X amount of money that I see what's happening, I want to know that when this thing collapses, what's something that's safe that I can do that will also give me protection, and I would argue a great increase on your capital as well, especially with gold and silver. I mean, they're trading at essentially what it costs to get out of the ground, so there's a natural floor there. Again, the tricky thing is that as much as I wish I could sit here and tell you which day that's going to happen, I don't know. So you may have to wait a little bit longer. I find most of the people like yourself and the other guys in the Austrian and precious metals community, no one knows for sure yet. If you can have that patience and you see what's coming that has to unfold at some point, to me, gold and silver still are incredible value here. Certainly if you pick some good miners. Again, keep in mind, I know you know this, Jason, there's a difference between miners and physical metal. If some guy's out mining but doesn't find anything, not going to help as much. But if you identify some good mining companies that you like, can even get leverage on the miners. And, well, maybe I shouldn't even mention this. Again, I'm an option trader. So actually back in 2011, I had some call options on primarily, I think it was GLD and SLV back then, which, again, this is not for conservative investors, or this is more of a speculation, but continue to think that, especially with the miners, and if you are into trying to time short-term stuff, which again in these markets is incredibly risky, there are going to be some stunning gains at some point. So I know it's not always what gold and silver investors want to hear yet. That's the challenge. The basics are easy enough to grasp and find out, and there's people who are sharing that information. Again, I think really it comes down to the mental approach and being patient and being confident in what you're studying and seeing and sticking to that, because there's certainly a lot of information or propaganda out there to convince people otherwise. Certainly, I'm sure the banks like when people sell their gold and silver. And as Ted Butler has reported, apparently, well, we've heard reports of JP Morgan accumulating massive piles of silver. It looks like Goldman Sachs was a stopper recently and now is acquiring physical metal. So again, I like to look and follow what the banks are doing, much less what they're saying, which again can be a good thing for people to be thinking about.
And recently, the Bank of International Settlements, I believe, has either gold leased or gold swapped about 570 tons of gold, which is a lot of paper gold. I think personally, researching this for many years, that the manipulation of paper gold and silver prices is extremely well documented. You know, you're specifically citing 2011. I think that was a key point. I think the manipulators, the bullion banks and the central banks changed the rules to back that up. There's actually a book you might find interesting. It's called The Gold Cartel by Dmitry Speck. It came out a couple years afterwards. He's a European who researches gold manipulation, and his contacts in the European banking industry and at the European Central Bank. Apparently, you know, as Greece was having trouble, the euro was on the ropes back then, and the gold price was around at $1,900 US and about to go higher. Remember, the US had just got their debt downgraded too, in addition to Greece. It looked like gold was about to go a lot higher than 1900. The ECB was supposedly on the phone like multiple times a day screaming at the Federal Reserve to knock the gold price down. So it's the details like that and are mentioned in the book. So if our listeners want to go check that out, they can, and you know, decide for themselves. But I think it's extremely well documented about gold and silver manipulation. Do you think we've bottomed, Chris? Do you think we're close to gold and silver bottom, or do you think we're going to maybe go in a trading range for a little while longer or lower before we bottom?
Wow, well, that's a great question. Let me answer it like this. I think we've bottomed. Again, I like Ted Butler and his research, and he feels, based on a lot of the things he's seeing in the details, that we're finally to that next move up. It's a tricky thing to say, though, because I'm always stunned by how long it's gone on. So while I think there's a good chance that perhaps we have reached the bottom, I think it was an interesting reaction yesterday where essentially the Fed raises interest rates and gold and silver still trade higher. So I think there's a good chance we've bottomed, although I also factor in that it could go on longer. It's really, I don't think anyone knows the answer to that yet. We're making our best guesses. Again, I factor in a lot of the other, you know, there's certainly the things that are happening in gold and silver, although when I look at the other things happening politically or in the cryptos, again, back to that missing 21 trillion for a minute, one thing that I listened to Skidmore's interview on Greg Hunter's USA Watchdog, Actually emailed him too. Seems like a really nice guy and intelligent as well. And I don't know if people have heard this yet, but the documents that, I mean, he went onto the government's website, went through their own accounting documents, and after he started reporting it, you would think maybe the government says, "Oh wow, this isn't good. We should do an investigation or look into it," right?
The government doesn't want to make itself look bad, though. So, like,
did you hear what they actually did, though?
They pulled it from the website.
Yeah.
Yeah, I'm not so.
Who's 21 trillion hide the evidence? I mean.
So, Chris, they've been doing stuff like this for years. This is why most of the information is at security clearance level, a lot of the really good stuff, and it's, you know, even when it's declassified 40 or 50 years later, a lot of it's markered out and redacted. Mm-hmm. So the government, when the government screws things up, whichever government agency screws things up, there's a lot of money wasted or stolen, or whatever military operation went wrong, or whatever government boondoggle, you know, they can literally classify something so the public doesn't see it. Or won't find out about it for decades, if they find out about any details at all, until most of the people who are alive at the time when it happened are dead. So this is the new normal. Most Americans, you know, like what one of your bosses said, traders on the floor, how, you know, this is America, we don't manipulate markets like this. You know, that's like kind of the Disney view of American government that, you know, you and me and pretty much most of the other Americans who listen to this podcast were taught in a government school. That, you know, in our textbooks and the Pledge of Allegiance and all that, that America is like the shining beacon light on the hill of responsible democracy and freedom. And, you know, the truth and the reality is, for decades, you know, things have been getting a lot worse with corruption and fraud and felonies and pretty much all this stuff. And, you know, now we're at the point where, you know, a lot of the things that in the past Americans could trust, like with the Department of Justice and the FBI, maybe indicting, like I think, honestly, Chris, I think like 20 or 30 years ago, I think Hillary Clinton would have easily been indicted. Mm-hmm. But in the environment we're in now, you know, I think basically she could continue to commit felonies and other crimes, and I don't think she'll be charged or anything like that.
Yeah, it's incredible the things that are coming out, and I'll preface this as somewhat speculative, although with the pedophile stories and some of the things about the Clintons, I've been hearing about these for about a year or maybe longer by people who were saying, just watch out, these things are coming, and they've turned out to be quite right. And from a lot of those same folks, I continue to hear this is just the tip of the iceberg. Well, so you wonder how.
So Barney Frank, did you hear about this story?
Boy.
So supposedly about 15 years ago,
I can't even imagine.
So on C-SPAN, in public, in open Congress, Barney Frank, it was recorded on C-SPAN, Barney Frank admitted that he ran like a gay prostitution ring with like underage boys. Mm-hmm. And it was said, you know, in public, on TV, and he said, if anyone brings me down, like he was talking to the other senators, I think he's congressman. So the other House of Representative members, the other congressmen in the room, Republicans and Democrats, he said, if I go down, I'm taking a lot of you with me. And so, you know, there were no charges. The mainstream media, I don't even think, covered it. There was none of this stuff. And he was, you know, running a male prostitution ring with underage boys out of his own townhouse here in D.C. So, you know, the mainstream media is definitely helping with this cover up. And, you know, now it's kind of with all these sexual harassment suits and rapist things, like it's kind of turning into a crazy witch hunt. I'm glad that the people who are real victims are getting justice, but I'm not sure people are losing their careers without full investigation and due process though. So that's what worries me now. So if you're a victim and you can get famous, get a book deal, or if you're a crappy movie star and you can move your career along, you know, even if it's a false accusation. I was actually just watching an interview with Stefan Molyneux and Michelle Malkin. You know, right. There's victims now that are coming forward that are not real victims. So, and they can in public call you a pedophile or sex offender if you're not. So there are a lot of pedophiles and sex offenders and rapists and sexual harassers, but there's also people who are getting false accusations labeled against them. So it's getting crazy. It's getting out of hand at this point.
Yeah, and in both cases, the people who are actually doing these crimes, and then the people who are falsely accusing others of doing such things, are both, I don't even know what's the word, tragic, sad, or unfortunate. And again, why I think it's important to keep seeking out information and figuring out what's really going on. But to the bigger picture, I keep wondering at some point if it's a matter of hitting some sort of threshold where, as more and more people begin to find out the guys who have been making the rules and taking, for example, taking the taxes, where, for a long time, you still hear these arguments of paying taxes, patriotic. I pay tax because I like being free, although the idea that paying money that, disappears into the Pentagon or is used for all of the unfortunate things that it does, I think people are noticing this. Again, one thing I've been wondering about the cryptos, where, especially in these last couple of weeks, where the pricing has gotten manic. Now again, I'm a believer that here we have a system that, at least from everything I can see right now, I see replacing what we have. So on one hand, if you think about, I saw the report that if you add the world stock markets, the value is about $76 trillion in the market cap, versus the cryptos are about $500 billion. So I think we're in agreement that the stock markets have become pretty bubblicious due to all of the extra credit. Of course, so far they've only gone up. But think about back in 2007, 2008, once people started to realize there were problems. If even a trillion, with 1/76th of the money in the stock markets went into cryptos today, you would triple the size of the market. So on one hand, what I've been recommending to people is, sure, have some percentage. It doesn't need to be your whole portfolio, even whether it's maybe 1 or 5 or 10% of the cryptos you like, and leave them for the long term. In the scenario that we've been talking about for the last half hour or so, where some problems are coming to the government, I think that'll do really well. Now, with that said, in the short term, especially 2 weeks ago, when we saw Bitcoin just jumping about $1,000 every day, I guess the best way, and I'm still not sure, but it reminded me of the books that I've read about when you experience a hyperinflation and see the rate at which things go up. It started to feel more. Again, there is speculation. There is a lot of money flowing in there. But seeing that rate of increase, now it could be we see a big pullback and things stabilize a little bit. Or, again, it's still a little bit early to say this is definitively what's happening, although I at least am factoring as a growing probability the cryptos. Maybe the move isn't as much about a rise in the cryptos, but perhaps the hyperinflation of the dollar has begun. Now, certainly if it has, then you look at the pricing of the cryptos, that would fit what would happen at some point. And I think it's interesting because, it might sound, people hear the word hyperinflation, most Americans especially, or in other established countries that haven't lived through that, it's so extreme, but it's no less extreme than missing $21 trillion or off-balance liabilities of $100 or $2 trillion. And I find it interesting that most people don't think of that because they think, well, if there was really a problem with the dollar, we'd see it in the stock market, we'd see it in the bond market, we'd see it in gold and silver. Yet, look at what's happening in those markets. No matter what happens in stocks, there's printed money going in, so they can't fall. They're not being allowed to fall. Similar with the bond market, which, talk about market manipulation, the Fed openly manipulates the bond market and just calls it policy, which doesn't change that you're distorting the market. And then with gold and silver, I would argue that if you took away those short paper contracts, you'd have, I mean, in what was Jim Rickards' first book, Currency Wars, a couple of years ago, where he had that chart, and this was back in 2011, that if you did 100% backing on, I don't remember if it was M2 or M3, but just divided.
I think it was just M1 because it was the smaller base money supply. Because if you were going to back, M2 or M3, it would be gold over 40,000. So I think he's been calling for what, 10,000 gold.
Right, which, again, whatever the numbers are, just that in 2011, and only God knows how much credit and money's been created since then. But if in 2011 you just divided, the gold over the amount of dollars that are there, the number is 45,000. Whether that's rounded up or down, the point being things are that far out of line. And so it's like the typical indications that you would have for a problem. The warning light is broken. The conditions are there, but the warning light isn't going off. And I find it interesting how in the one market where, well, I know we have these CME futures launched now, but still, for the most part, they haven't found a way to manipulate it, is going nuts. So again, that's something I'm keeping my eyes on and wondering. I mean, I have to imagine that before things collapsed in Rome, there were signs. If you go back, I'll bet if you were working at Enron in the couple months leading up to the collapse, there were signs of things going on. It didn't come as a complete shock. And especially in my research of gold and silver, I've really thought a lot about, okay, what are the signs that you would expect to see before the manipulation scheme finally collapses? And those signs have been growing for years and seem to be accelerating now, whether it's missing money or the scandals, or it just seems like there's a whole lot of stuff out there happening. And then even looking at this recent budget deal, I find it amazing. It's like they've even stopped trying to pretend that there's a solution. They're just arguing over the budget deal, which isn't even over cuts. They're arguing over how much to increase spending. And I always makes me think back to 2011, where we had the debt ceiling. At least there they gave you the political jargon of, all right, well, we're going to reduce spending. Again, the debates then were always cutting the growth of spending, not actually a reduction. But it's just interesting that here we are 6 years later, and I feel like it's probably been pretty safe to say for a while, but sitting here on December 14th or 15th or whatever today's date is, 14th, that they've given you every indication that if you're waiting for some government plan, or I know some people were thinking Trump's going to come in and fix everything, I don't see how that's possible.
Yeah, I mean, he just inherited such a mess, and he's, these tax cuts to the private sector are good. I'm in favor of tax cuts. The problem is there is, like you said, no corresponding cuts in government spending. So long term then, with private sector tax cuts, the national debt is going to grow. It's just a math thing. So, long term, this is not going to end well. So there's going to be a lot worse problems. Maybe things are going to be delayed longer than we think. God knows they've been delayed a lot longer. A lot of people in the Austrian School of Economics community have been predicting hyperinflation for years, since the 2008 financial crisis. And then central banks intervened. They were predicting hyperinflation soon after that. That was a mistake. there hasn't been hyperinflation, although there's an argument to be made that asset prices have been hyperinflated. But, the real economy hasn't been hyperinflated. Consumer prices have not been hyperinflated, like that $11 loaf of bread that one of your coworkers was talking about. Now, maybe the loaf of bread is still $4, but the portion size is cut in half, or they've substituted out some of the ingredients. We're talking about that too, how like the prices people pay now at Whole Foods. But, that's a topic for another day. As a trader, Chris, do you think it's smart, since I know you're trading cryptos profitably, do you think it's smart for people to take money off at least some money off the table when they have profits, and then maybe rebalance their portfolio and go and buy, cheaper things that are cheap, like physical gold and silver, or maybe take it out of the system, maybe look if they made a lot of money trading cryptos, maybe go and buy a rental property for cash flow, of course, after they pay the taxman. Do you think that's just prudent?
I think that's not only prudent, but highly recommended, almost essential. I did make a decision about 2 months ago, based on where I saw cryptos and gold and silver standing. I'm still learning my lessons about diversification. I like to learn things the hard way. And it was interesting. Have you ever read any of those Jack Schwager books, the Trading Wizards or the New Market Wizards?
I read one of the Market Wizards, yes. And Jim Rogers was in there in the one particular one I read, and there was, I forget the other experts that were in there. It was a good book, hearing different perspectives.
Yeah, well, the founder of the shop that I traded for, this fellow named Jeff Yass, is a brilliant guy, and he was mentioning that if you're not diversifying, you're throwing money out the window. So I've been in the past probably too heavy of a percentage, which was almost 100% in silver and gold, just because I felt the fundamentals were so far out of line. And again, we're in December now, so let's say back in October, I felt nothing has changed my underlying assumptions about gold and silver, although I felt there was a high enough chance that there would be a big move in cryptos before the move in gold and silver that I took some of the gold and silver and reallocated into cryptos with the hope, hopefully it's a little more higher probability than just hoping, but that if the cryptos go up, then you might have the chance to buy back more gold and silver than you originally had. And especially with the crypto market, again, I think if our system falls apart and cryptos are the infrastructure of the world, then long term you have room to go. With that said, sometimes things play out a certain way, sometimes timelines are different. So the one thing I think most would agree on is that we're probably going to have a lot of volatility in the cryptos. So yes, absolutely. If you've been fortunate enough to make some big profits in the cryptos, whether it's investing in gold and silver, I think at these prices is an incredible trade to have on. If you have other investments, like you mentioned, if you have a real estate investment that can provide cash flow, that can be a good idea. I guess my one thing to be careful about there is that it seems like real estate has become another bubble now as well. So certainly you want to structure any deal that you're doing so that if the real estate market gets pummeled, that you're not blown out of your trade. And along those lines, you and I were talking before we started today about how some people are using margin or leverage for the cryptos, which I would be very, very, very cautious against and don't do myself, because if there's ever been a market that's volatile enough that you could be right long term but get stopped out of your trade, I mean, maybe Bitcoin goes to 50,000, but before it does that, goes down to 5,000, you get stopped out, and then the next day it explodes, you don't get to capture that. So certainly being careful about margin or anything like that is worth noting. And just, two other things that are slightly different that I think are worth mentioning that both you and I have done is if you have money and can invest it in yourself in the form of education, or if you see what's happening and you're seeing a need in the market and saying, all right, I see the world's changing and here's something that's needed. You and I, we have the financial background, so sharing what we're seeing to help other people understand what's going on and make good decisions. But it could be anything, and certainly I think that's what the cryptos are. A lot of people are seeing the problems and creating business plans that factor that in. So again, certainly I was born in 1978, so growing up in that era, it's almost as if we've been indoctrinated that the only place to put money that you want to invest is in the stock or bond market. But hey, maybe you have a neighbor or a friend that has an idea that you think is a great idea, and there's a lot of entrepreneurs out there that have great ideas and are looking for capital. So whether you're doing something on your own or want to join up with someone, I think it's helpful for people to remember that, yes, there's a stock market, bond market, there's silver, gold, cryptos, and all sorts of choices, some which look better than others. But you're not being forced to take your money and put it in some investment. And there are things outside of these established financial markets, and certainly to the degree that corporations and a lot of the traditional infrastructure is facing some problems. I think it's a great time for people to be learning and for entrepreneurs to be creating things. And so just another option for people to consider that for me has been a big part of my life and I think can be helpful for people to look into.
Yeah, I agree. Choosing yourself and investing in yourself and, hopefully increasing American entrepreneurship is going to be a growing trend in the near future. I think small business creation in the United States has been down for a couple decades, but hopefully, there will be a revival with the reduction in regulations that President Trump has put forth. Hopefully, these new crowdfunding websites and maybe even these initial coin offerings. Some of them are not, pure fraud. There's actually some viable ones.
Right.
So hopefully, all these things together. I think Congress also just opened it up in the last year or two to now where a regular retail investor can invest directly in a startup. So now you don't have to go through the Wall Street or Silicon Valley venture capitalist cartel that has been set up with the lawyers and huge process, very expensive regulatory structure to raise capital. So hopefully that will get the American entrepreneurial engine and American small business engine growing again, get the real economy. Because one of the things, before we wrap up the interview, Chris, we've been talking for almost an hour. One of the major things that's happened for decades now is the American economy, the real economy, has been kind of hollowed out and basically financialized. So, all these trillions of dollars that were created, whether it was the missing 21 trillion or the tens of trillions of dollars that these central bankers have printed, the people on Main Street, a lot of the real economy hasn't benefited from any of these. So the money hasn't been invested in new infrastructure or anything like that in the United States. The money has gone into financial assets.
Right.
So, the Wall Street and the hedge fund guys and large corporations who are able to borrow, at artificially cheap interest rates to buy back their shares with debt and then move the stock prices higher. So, those are the people who have benefited from all these trillions, and the military industrial complex, obviously, from these tens of trillions of dollars being printed. So the guy on Main Street, the middle class person, has not really benefited too much.
Yeah, and like you mentioned before, I've certainly agree and have wondered why, based on the amount of money that's printed, I have to acknowledge that I thought we would be seeing regular everyday prices, and certainly they have gone up. I mean, when I go to Whole Foods, sometimes I'm wondering if there's financial aid available with the hot bar. But I think you're right that a lot of the money has gone into the financial markets, and that's where a lot of the inflation has occurred. Yet should some of that money begin to start coming out, which I believe at some point has to happen Heard China is now teaming up with Goldman Sachs to invest in U.S. assets, and there's lots of piles of money out there that, as much as I don't think all of the bankers are quite so brilliant, I think a lot of these guys have to be aware of what's coming. I think that's why a lot of the elite money has flowed into crypto. You also, whether it's JP Morgan or Goldman Sachs or China that are buying gold and silver, you look at what some of the bigger players are doing, the handwriting is there. So certainly it's a challenging time, yet an exciting time with a lot of opportunity for the people who take the time to look into these things. And by all means, don't go out and buy or sell anything just because I say it, or you say it, Jason, or because Goldman Sachs or Ben Bernanke or Jerome Powell say it. But I do recommend people considering a lot of this information and then just doing their own research and thinking about what makes sense, because you do have the ability to do that. Regular people can understand this. And like they pointed out in The Big Short, it's amazing. There's a big effort, and I've heard people mention that they feel like it's just too complex, or I'm going to feel like I'm stupid if I ask these questions. And if there's one single thing I could encourage people to do, is to let go of that. This is confusing, even for the people who are involved in it. But when it's simplified, leading up to the housing bubble, they're making a lot of crappy loans. Yeah, you had CDOs, CLOs, all sorts of different complex stuff. But the underlying things going on at the heart are understandable. And Jason, again, I appreciate not only having me on the show, but I've listened to several of your interviews, and you have a brilliant mind and have done some amazing research. And I appreciate that there are guys like you out there that are simplifying this for people. So if you're a regular guy that's not a hedge fund manager but still wants to take care of yourself and your family and be prepared for what's coming, I think that's possible. And I think that as this stuff unfolds, we've been trained to think that it has to be a complete Armageddon apocalypse. Although the more I think about it, the more I see, well, geez, if we weren't having 99% of our wealth stolen through the dollar, it's actually kind of exciting to think about what life could be like in an honest system. So I do think there's a lot to look forward to. There are things that people can do to get a good outcome. And by all means, I'm grateful that I've been able to be involved in this anyway. And again, thank you for having me on your show, and really appreciate all the work that you're doing. And I think it's really important and is an exciting time.
Well, thank you very much for the kind words. I'm going to do my best to keep putting out quality content and trying to improve. I've read so many books, and I've just tried to learn from other people who have more experience and are smarter than myself, especially because I didn't have a technology background. So with these cryptos and many other things, I was just a regular finance guy just like you. So trying to learn some of the technical stuff for cryptos and other technology industries has been difficult for me. But if our listeners want to follow more of your work at Arcadia Economics, how do they do so?
Yeah, well, the website is at arcadiaeconomics.com. We have a bunch of free content and a YouTube channel, and also created recently a monthly market snapshot that is designed so that, if you do have a busy life and aren't sitting here digging through podcasts and stories like you and I are all day, Jason, it's a report that comes out once a month and is simplified so that you can read it. It's written specifically to explain in clear language what's going on, some of the options that are available, why I think the things that I do, and really answering a lot of the questions that are on people's minds, like, is Bitcoin a bubble? Is it safe to invest here? And really breaking down as much as I can what I'm thinking, not so that you think you might agree or disagree with certain things, but I aim to give people an explanation that at least then you can take that, you can do your own research, but people have been finding it really helpful for getting a good starting point and grasp on things. And by all means, you're welcome to contact me. I love hearing from the readers and listeners. And again, that's arcadiaeconomics.com. And with that said, just thank you again for having me on, Jason. It's always great talking with you and really excited about the future.